Welcome to this special show on the minutes of the Monetary Policy Committee meeting. The minutes are out and they indicate, broad brush, that while the Reserve Bank of India members, especially Dr. Michael Patra, seems more worried about inflation expectations rising and maybe getting unhinged, the external members of the MPC, Dr. Ashima Goyal, Jayanth, Varma and Shashanka Bhide, appear to be more worried about growth and the possible overreaction by way of rate hikes. As we know that the members were agreed on a 50 basis rate hike, except Dr. Goyal, who would have preferred a 35 basis rate hike. Otherwise, there was broad agreement in terms of the action and the kind of guidance or the lack of it that the stance indicated. The stance indicated that we are going to continue with the removal of accommodation stance. I'm now joined by the external members, Dr. Shashanka Bhide, Dr. Ashima Goyal and Dr. Jayanth Varma. Thank you very much, gentlemen and Ashima, for joining us. Let me start with the lady. Ashima, this worries about growth. Actually, if you looked at the high-speed indicators, lead indicators, car sales, SUV sales, as well as credit growth, some of the banks are reporting 20% and more credit growth, those that have given us advance estimates. Why would you worry so much about growth? That's what your minutes seem to indicate.
I'm saying that there are uncertainties, primarily due to the global recession threats and the problems in China, etc. And if you look at high-frequency car sales, but they are just getting over a chip shortage and taking advantage of pent-up demand. But even credit growth, though it's very high compared to last year's base, but month on month, the momentum seems to be softening slightly. Okay. And then also because monetary policy acts with a lag, and so the rate hikes will take effect, and if we are going into a slowdown, we want to modulate demand so that it compensates for expected slowdown in export demand, right?
Yes.
So we don't want to overdo the demand tightening. And as it is currently, given our forecasted inflation rate, the real rates are positive. So that is adequate at this time.
More of that in the input side, not so much on the consumer demand side, I think. So I guess there are these concerns that the growth that we see is not necessarily all that broad-based. I think so. Particularly, I would also like to mention the investment side. I don't think we are seeing the momentum in investment that is necessary to sustain growth.
Mm-hmm. If you looked at the inflation over the last 3 years, it's only about on 4 or 5 months that inflation has been below 6%. Now, that mandate is cast in stone for you. Dr. Varma, is not that a bother? I mean, what is the sanctity of that 5% forecast? What if it is not 5% but north of it? Is not that a worry? That in the past, the forecasts have not come true. For an overwhelming number of months in the last 3 years, the inflation has not remained under 6%.
That is true. That is true. And out of that 3-year period, the entire period of the much of 2020 and early 2021, it was a very conscious decision to prioritize growth over inflation.
Yes.
There's no question about that.
Yes.
That was very clear. It was very clear in the resolutions. It was clear in the statement. So that was a very conscious decision that you had a once-in-a-century pandemic that needed a very, very strong response. Now, it was only from around mid-2021 that attention could shift to inflation. And at that time, I argued that the time had come to start focusing on inflation. And the problems, the problem of 6% and 7% inflation today is really the consequence of what we did or did not do a year ago. So slamming the brakes now, saying that inflation is very high is pointless. If we want inflation to come down tomorrow, well, we should have raised rates a year ago, 6 months ago. Now, saying today that, okay, we did not raise rates a year ago, therefore let us raise rates by twice the quantum now, that doesn't make sense. That doesn't make sense at all. Because the raising of rates that we have done over the last 3-4 months, that effect has yet to cascade through to the real economy.
Okay.
So that is really the point, that the only way we could have brought inflation down now was by acting a year ago.
So, now that note has to be written to Parliament, and I guess a meeting will be called of all the MPC members. Would it not irk you that, you have to convince Parliament why it happened? And, the argument that you are still not willing to raise rates, will it wash? Is that a point that bothers you, that you have to defend? And therefore, giving a softer, saying that I will not go beyond 6 right now, will it sit well for Parliament?
Well, I think, I don't know whether it goes to Parliament or government or whoever.
Okay.
But whoever receives this statement, is also aware of the ground reality that we went through in 2000.
Yes, of course.
Right? They are also well aware of the situation in Ukraine. Right? So it is not as if those who are writing the letter are on one planet and those who are receiving the letter are on another planet. They are all living through
Yes.
the same situation that is there. That there are a lot of things that are that were unexpected that have happened. Yes, and we need to react to that.
Yeah.
But the point is that we also have to ask whether the response already there is adequate or not.
Okay.
We need to ask whether monetary policy needs time, and whether there is any sense in you see the idea that if you raise rates by another 1%, inflation will come down a few months faster. That is a very suspect assumption.
No.
Because monetary policy actually lags.
Yeah.
Whether it raise to 6 or to 7, it will still take time to
It will.
So there is no escaping the facts that we will have to live with this for another quarter or two before the rate starts coming down.
So, Dr. Bhide, your thoughts? Don't you think more work needs to be done? 4 is not even 1 year down the line.
Yes, but I guess the point I think is what Professor Varma said. So when would we, should we have started this? Right? I mean, so I think that is where I think there is a bit of a difference in views.
Okay.
And I think that we are just recovering to get to the output levels of pre-pandemic times. I think so. So I guess probably at the beginning of 2022 was a time when we could have thought of using monetary policy to restrain the inflation pressures at that time.
That is fair.
So I think the target still is 4%, but obviously I think the time that is required to get to 4% is not going to be 1 quarter or so.
I'll come to Dr. Varma in a minute. Ashima, don't you think more work needs to be done to get to 4%? Is that on the anvil? And if it is 2 years away, you're not uncomfortable?
If you see the bands around inflation, they're much wider than around growth. Yeah, so there's a lot of uncertainty for the projection RBI has given. And we must remember that a lot of the inflation in the last 2-3 years was due to these global pressures, supply chain snarls, etc. Now we are facing the possibility of a slowdown, global slowdown, of concerted central bank action against inflation, of oil prices and other commodity prices softening, supply chain bottlenecks coming unsnarled. So we need to watch. We might see that inflation comes to 4 much earlier than the RBI forecast.
Okay.
And in the current situation where demand could slow because of the external slowdown, and we are not in a situation of excess demand, even the current account deficit, a large part of the deficit is due to the high oil prices. And it is just the recent data on WPI shows that it's coming down. International prices softening reflects first in the WPI. So we will see the CPI also softening. Much of the rise of the last month has come from the fuel and light component, transport and communication, all of which is affected by oil prices, and that will pass through. So we have to watch this space, and that is why I'm saying I'm not ruling out further hikes, but I'm saying that it has to be conditional on the realizations of inflation and growth. And the refinements in our projection as we get more data.
I want to take a break, but thereafter, some very strong worries over the non-transitory nature of inflation have come from Michael Patra. I'll read that out to you after the break, and I want to discuss that. Back in a minute.